Good afternoon. Guys, today's FOMC, but the FOMC is not a part of the good news, unfortunately, because there's a 99% chance that we're not going to be getting a rate cut today. And that's due to multiple factors, and they all sum to the same place of the Federal Reserve still being uncertain on what will happen with tariffs. We don't even have a singular trade deal yet. We got some good news last night that caused the price of Bitcoin to pump, which we will get into. And that's only one of the good news that we will talk about in today's video. But the FOMC today is not, during the FOMC, we're not expected to see any sort of rate cut. And we're going to stay at 4.25 to 4.5% for the interest rates. But there is in the future good news because the Trueflation Index, that is a blockchain-based inflation of goods and services tracker, it's suggesting that the year-on-year CPI is actually 1.6% and not over the 2.5 or around the 2.5% region that the government is telling us the CPI is. So this is good news. We know that the Federal Reserve has a dual mandate of taking inflation back down to their 2% per year appreciation goal and also having a strong labor market. The labor market is strong and we're coming close to 2% inflation. So these are very good signs. The only issue is the tariffs are being still very uncertain. So I think that is why we're not going to be seeing a cut. I think probably like 100% chance we're not going to be seeing the cut during today's FOMC. It's possible if we can see more good news coming out of the China and US conversations about tariffs that in maybe June we get rate cuts. But I would say that the most probable scenario is still July onwards that we get a rate cut. Obviously, the GDP came down into a negative growth a couple of days ago. So that's not adding to the success of the American economy at the moment and putting more pressure to the Fed to be cutting rates at some point, whether that is June or July. Regardless, we're going to get it at some point, but today we're not going to be seeing a rate cut. At least there's a very high chance that we don't see it. So that's the FOMC covered. We got some very good news. And the good news is that China confirms a plan to begin trade negotiations with the United States. Obviously, it's just like a plan, a plan to begin. It's not like, okay, yes, we're going to do a trade deal with the US. No, but it was still strong enough news to push Bitcoin up around 3.3% last night, taking us back into $97,000. From a technical perspective, this is good because we've now invalidated the bump and run pattern, which I spoke about yesterday. And I was a little bit concerned about. So that is very good news. No more bump and run reversal. We are now in a megaphone pattern or an ascending, broadening wedge pattern, as they call it, which does tend to see a break to the upside. And that's what we should be expecting. You go to the daily time frame, you look at the M2 money supply, and you can see that Bitcoin is just following liquidity and liquidity is going up. We saw this drop, if you want to place Bitcoin to here, we saw this drop right there with what was happening over the past few days. And I think our trajectory is to the upside. So we should be seeing over $100,000 of Bitcoin very, very soon. Just be patient. And I'm just keeping my long positions open and waiting for that over $100,000 Bitcoin once more. Some more good news we got yesterday was that China is now injecting tactical monetary stimulus ahead of the US trade meeting. So they had this trade meeting together. And after this trade meeting, they decided they said that they want to cut their rates and also inject liquidity into the market. If that happens, then the M2 money supply is just going to keep on rocketing through the roof. So currently, when you put these two together, you get about a target for Bitcoin in the $120,000 region. But if China starts printing money again, we know the US will do it also because, they need to refinance about $7.5 trillion of debt. That could take the M2 liquidity to a point where it correlates with Bitcoin at around $180,000 to maybe even $200,000. That is my personal expectation for Q3 to Q4 of this year. So I think we can easily see a Bitcoin facing prices near the $200,000 area, which is fantastic news. And then the final amazing news before we do a comparison with gold is that the majority Republican whip, so in the Senate, the majority is in the Republicans, and Tom Emmer is the Republican whip. So he's essentially the most important person in Congress. He's the most influential and the most important person in Congress. And standing next to the Speaker of the House, he delivered an incredible 2-minute, 19-second speech about literally crypto, which is unbelievable. Like, this is the greatest political advancement for cryptocurrency that I have seen ever before. He posted on Twitter, 145,000 views. It is unbelievable. The most powerful person in Congress, next to the Speaker of the House, delivered a 2-minute speech on crypto, and this is unbelievable. So do be expecting all the cryptocurrency bills to somehow get passed. You know, it can get changed and different clauses can be added, but expect the Genius, the Stable Act, hopefully the Bitcoin Reserve Bill Act from Senator Cynthia Lummis, for those to get passed in some way, shape, or form. It won't be what you expect, but at least I told you, if there is any time in American history, American political history, where we have a chance to get these bills passed, it would be during the present administration, where Congress is bullish, the president is bullish, and so many people are bullish. But we have to do this before the midterms because Trump is not looking too popular. So we have to accomplish this by next year. Otherwise, we will lose. I mean, there's a good chance that Trump loses the majority in Congress and in the Senate in the midterms because his popularity is tanking. So I'll just talk about one more thing and then I'll call it a day because I know you guys want to rest and watch the Moon Show because we will be streaming the FOMC over on the Moon Show channel. So subscribe to the Moon Show channel if you're not subscribed already. So the stream will be starting in about 3 hours time. After I upload this video, I'll take a bit of a nap and then prepare for the show. So I'll see you there at the Moon Show channel. The final thing is that gold has been absolutely surging massively over the past 1.5 years, right? We're up like 48% in 1 year alone, which is unbelievable. Actually, gold is up more in the past year than Bitcoin is up. And that's kind of crazy. But I just want to draw the correlation between gold and Bitcoin. So if you look at the two together and we get rid of everything, so if we do that and get rid of the M2 money supply, you can notice how similar the chart looks. Like, look at that. Come on, like just look at how similar this inverse or this cup and handle pattern looks like with Bitcoin and gold. The only difference is gold decided to do this, whereas Bitcoin decided to see a retrace, test the resistance of the cup and handle, and now it's confirming the cup and handle, which is a technically more stronger confirmation that we're going to go up. And we're going to decide to go up now like this instead of going straight to the upside, which I think is better because it gave us the opportunity to accumulate more Bitcoin before we see a stupid number in the multiple hundreds of thousands of dollar regions. So yeah, just wanted to draw the comparison between Bitcoin and gold. I think Bitcoin will follow gold in a very sharp way to the upside incredibly soon. But guys, thank you so much for watching that quick update on Bitcoin. Everything is looking good. So I'm bullish. I think you should be bullish too. But of course, make sure to do your own research before trading or investing. It's super important. This video is a part of your research, obviously. But yeah, I think it's a good time to be bullish on Bitcoin. So guys, take care, and I'll see you all in 3 hours for the FOMC stream. Take care, and as always, bye-bye.